You have to hope, if you're waiting to buy cheap gold, you have to be betting that the dollar gets more valuable. And I just think that's a slim possibility. I mean, it may get more valuable relative to the yen or the euro, but not gold. If you're waiting for a pullback in gold, you could be waiting indefinitely. I would just buy it now, and if it pulls back, what's the big deal? I mean, it's going much higher. You can always buy more if it pulls back and you have extra cash, you can do that. But you should be buying it because I think the downside is relatively limited.
In 2024, despite facing challenges such as a strengthened US dollar and the Federal Reserve's hawkish stance, gold prices have exhibited remarkable resilience. This resilience underscores the inherent strength of the gold market, which typically falters in the face of a robust dollar and Fed policies favoring higher interest rates. Yet, despite these obstacles, gold has maintained its ground, indicating additional supportive factors at play. Notably, investor Peter Schiff highlights the heightened competition between gold and the dollar, prompting central banks to carefully reconsider their reserve compositions. Recent trends show a growing inclination towards gold over the greenback, driven by solid investments in over-the-counter markets, consistent central bank acquisitions, and increasing demand from major Asian markets like China and India. For these buyers, gold represents more than just a traditional safe haven. It is seen as a vital component of diversified investment portfolios and a hedge against currency risks and inflation. However, should the U.S. Treasury decide to follow suit and initiate gold purchases, it could further boost gold prices while casting doubts on the dollar's stability as the global reserve currency. Such a move may undermine confidence in official economic narratives, sending conflicting signals to the market. While some argue for the U.S. to bolster its gold reserves to prepare for potential currency fluctuations, Schiff presents a contrasting view. He suggests that in times of crisis, the country may need to sell its gold reserves to support its currency. Recent market trends indicate gold breaking out from long-term resistance levels, suggesting that waiting for a significant price pullback may not be advantageous. With gold prices continuing to rise, reaching around $2,360 during early Asian trading hours, Schiff cautions against delaying gold purchases. He emphasizes the potential for long-term appreciation and resilience in turbulent market conditions. Clips from Peter Schiff's interview with Bald Guy Money will be presented shortly. If you desire more videos like this, please hit the subscribe button and turn on the notification bell for updates. Thank you, and enjoy the video.
I mean, first of all, I think that's the last thing the U.S. government wants, is to help push the price of gold higher. Because a rising gold price is a bad sign for the dollar and its role as the world's reserve currency. I mean, the dollar's primary competitor is gold. Central banks have a choice. They can own gold or they can own dollars. And more central banks are choosing to sell dollars to buy gold. And so if the U.S. Treasury joined the gold buying party, that would put even more upward pressure on gold and create even greater incentives to buy it. And of course, that would send the wrong message, right? If the U.S. started buying gold, imagine the message that sounds. That's like, the policemen are having to, call in the police to protect themselves, right? I mean, it would send a message that things are not great, because we're telling everybody how great everything is. It's a great economy, the strongest U.S. economy, inflation is going back down. So why would the U.S. be buying gold? It would be sending a mixed message to the world. Ignore what we're saying. Look at what we're doing, right? We can say one thing, but we're doing the opposite by buying gold. So that's not going to happen. We should be buying gold. We probably don't have nearly enough, but it's more likely that we might start selling our gold. I'm not even sure how much we've got left. But if the dollar, or when the dollar rather, really starts coming into attack, we'll blow through our foreign exchange reserves very quickly. We don't have that much as far as how many euros we have, or yen, or pounds. So we may end up having to sell gold. We'll see. But I think that's more likely than that we start buying. You have to hope, if you're waiting to buy cheap gold, you have to be betting that the dollar gets more valuable. And I just think that's a slim possibility. I mean, it may get more valuable relative to the yen or the euro, but not gold. I think there's minimal upside potential for the dollar in terms of gold. Yes, there was a brief drop in gold when we had the crash in 2008. But you have to put that in perspective. Gold had moved from 300 to 1,000 from 2001 to 2008. So gold had a huge run. And then it pulled back 20, 25% with the financial crisis. Then, of course, it recovered and went to 1,900, made a new high. But we haven't had a big run in the price of gold. Gold's gone sideways for more than a decade. We've just broken out of major resistance, and it's not like we're miles above it. I mean, if gold was already 4,000 or 5,000 and you wanted to wait for a pullback, okay, I could see your logic. But we're at 2,300. Where's it going to pull back to? The breakout was 2,000, 2,100. I mean, we're very close to the floor. In fact, I was telling people on my podcast when gold was around 2,000 that was the floor. There are a lot of people who thought it was the ceiling. They were worried about buying $2,000 gold. And I kept saying, look, $2,000 gold is going to look cheap eventually. Don't worry about it. You're getting a good deal. And now it's slightly less cheap, but I think we've broken out. I think 2,300 is the new 2,000. So if you're waiting for a pullback in gold, you could be waiting indefinitely. I would just buy it now, and if it pulls back, what's the big deal? I mean, it's going much higher. You can always buy more if it pulls back and you have extra cash. You can do that. But you should be buying it because I think the downside is relatively limited. And even if there is a crash in everything, right, and the dollar goes up and gold goes down, I think stocks and real estate will go down much more than gold. So in terms of your purchasing power, in terms of your ability to use your gold to buy other assets, you're still going to gain value.
The BRICS nations, Brazil, Russia, India, China, and South Africa, are actively collaborating to diminish the supremacy of the US dollar as the global reserve currency. A key component of their strategy involves diversifying their reserve assets by acquiring gold. Led by China and Russia, these countries are gradually reducing their holdings of US Treasury bonds and other dollar-based investments in favor of purchasing physical gold. This strategic move aligns with their broader efforts to challenge the dominance of the USD and potentially introduce a shared currency among themselves. Their shift towards precious metals arises from concerns over financial sanctions imposed by the US and a desire to decrease dependence on the US dollar as the world's reserve currency. Peter argues that dissatisfaction with the current monetary system, which disproportionately benefits the United States, is driving this trend. He highlights how other countries are compelled to maintain large trade surpluses and accumulate dollars without any expectation of repayment, allowing Americans to live beyond their means at the expense of the rest of the world. Moreover, Peter criticizes the current system for its adverse effects, such as artificially low interest rates fueling asset bubbles. He advocates for transitioning away from the dollar as the reserve currency and suggests a return to the gold standard to rectify these imbalances. Now, let's return to the interview.
I think the world is going to go back to a gold standard based on its own self-interest, whether it's led by the BRICS or not, because the current monetary system doesn't work. I mean, it works for some people like the United States because we are the beneficiaries of this deal. But the rest of the world has to pay the price, suffer the burden. They have to run huge trade surpluses and accumulate dollars. And then they have to loan us those dollars in perpetuity and never expect to get repaid because we can't. And so the world has to live beneath its means to enable Americans to live beyond their means. The rest of the world has to consume and save and then make that available to the U.S. and finance these huge trade deficits that we have with everybody. And, this is causing all sorts of problems, not only the drain on the resources of these economies, but by keeping interest rates artificially low to help sustain the dollar, they also end up with asset bubbles and misallocations of resources, and they screw up their own economy. So we're exporting our bad monetary policy all around the world. And I think the sooner the world rejects the dollar as a reserve currency and moves on to sound money, the better off they're going to be. Now, of course, that's when the pain really begins in the United States, and we have to start, behaving like a normal economy again. We have to start producing before we can consume. We have to start saving before we can borrow. And that transition is going to, mean a lot of losses, a lot of financial pain, maybe even civil unrest. It's going to be a difficult adjustment for America to make. But the sooner we make it, the better. I mean, the longer we succeed in delaying the day of reckoning, the more we have to reckon with. And so the more difficult it is. But it's going to happen. It is inevitable. So I'd rather deal with it now, as bad as it is, than deal with it later when it's even worse. But the politicians would rather deal with it later because they may not be in office later, so they don't give a damn, right? They just care about themselves. That's why they went into politics, right? They couldn't give a damn about anybody else, and they don't care about the country. And so they're going to keep on postponing this until they can't postpone it anymore because there's a crisis. And the crisis will take the form of a sovereign debt and a dollar crisis. But I think if you look at the big buyers of gold, the reason gold broke out to a new high, it's not that American public has been buying gold, though they've been selling. It's a lot of these BRIC central banks that have been the main buyers of gold all year and last year too.
Despite the rise in U.S. Treasury yields, gold prices persistently climb, signaling a prevailing expectation of loose monetary policy. This overrides the typical relationship between yields and gold. Even as the dollar experiences modest gains amidst mixed economic signals, it fails to halt gold's upward trajectory. This suggests a sustained bullish sentiment towards gold in the market. Where do you think prices are heading next? Share your thoughts in the comments below. Don't forget to like this video, subscribe to the channel, and turn on post notifications for more content like this. See you in the next video.